I'm not going to have that same kind of lifestyle or freedom, that I'm desiring. And so that's where my heart really is to help other people come along with us in these models, coach them, help them replicate it, let them go teach the next generation, right?
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Yo, what's going on, everyone? Today, I have the opportunity to sit down with Kurt Simon, founder of Blue Capital Investment, and he's someone that also lives in Hawaii, Waimea area, east side of the Big Island. And for some of you who may know, it's also a place that I grew up at too, Pahoa, Hawaii, which is, the exact opposite side of the island for any of you know where Kona is. So Big Island, Pahoa, and like I said, he lives in Waimea. But anyway, it's really cool. I got to meet Kurt at the RaiseMasters retreat in San Diego. And as it goes, just walking up and saying hello to people that are at the coffee bar, grabbing a drink and, how's it going? Where are you at? Where you're from, Hawaii, where, Waimea. And it's, as it goes, one thing leads to another. And, it's just kind of serendipity, kind of really, really cool. But here's the thing. What I love about talking with Kurt, where his heart at, its mission is helping out blue collar entrepreneurs, construction workers, the roofers, the plumbers, the electricians, all of the people that kind of work and live and play on the islands, Big Island, and how he's using what he's learned to not only help out his family, but help out people of Hawaii to the community and really pass down knowledge about finances, but also the skills and how they, people can do this for themselves. And it's kind of close to home for me because I set out, traveling, around the world and lucky to meet many mentors and people to help me along the way. And this is the knowledge that I wish I knew when I was still on the island. So it's so cool to get to talk to Kurt and hear about how he's helping, his family and others, his mission values. And if you have a listen to Kurt, you can see how congruent he is too. How much he believes in what he's saying and what he's doing. And I just it's an honor to get to sit down with Kurt, and it's really great. So, listening to this episode, take some notes as always, hear about some of the things he's overcome, some of the things that he's thinking about, how he sees it and how he's giving back to. And of course, how, if you're a blue collar entrepreneur, if you're someone who is around Hawaii and is interested in how to invest with Kurt as well, have a listen in to see what kind of, return profile, what the model looks like as well. And so, like, subscribe, comment, reach out to myself on any other, follow-up questions, reach out to Kurt and enjoy. Thanks.
Mr. Kurt Simon, welcome to the show, man. It's good to have you here. It's really, really fun and interesting who you meet at the coffee bar, at a retreat, San Diego. It's RaiseMasters retreat, but it's like, where are you from? Like Hawaii, what?
Exactly. Yeah, it's crazy. And end up being from the same island in Hawaii is even crazier. And then to know like our hometowns and the whole area, and then certain people that it's a very small island, right?
Yeah,
very small.
Yep. Big island.
Very small Big Island, right?
Absolutely. So like I said, welcome to the show. I want to make sure that we get you introduced properly here. Tell the listener a little about who you are, your background, and what you do in real estate, and then we'll dive into it as we go.
Great, sounds good. So I'm the new CEO of Blue Capital Investment, and we're a private equity firm trying to raise money for single family residence, flips and developments, first here on the Big Island. And then we have a few spots on the mainland, but that's kind of our new venture. We've been in construction for all of my life, but on the Big Island here for the last 6 years, we kind of came to that in a backward mode through COVID, and developed our own construction company to really remodel houses now. So we have kind of two balls we're juggling, the construction side, and now we're going to be focused on raising capital to do the same things.
Outstanding. And with the construction side, this is something that you've been doing. Was that the 6 years?
Yeah, well, I've been in construction all my life. It's always kind of been a side hustle piece for me. Just supply extra income, flip houses, for extra income. And we were even doing it here on the Big Island in a passive kind of way. COVID hit, we lost some of our job flexibility. Really wanted to become an essential worker so we could keep making money. And so we started our own construction company focused on remodeling homes here. And it's been great. So for the last 6 years, it's really just been very lucrative for us. Three of my sons work with me. It's just us four. And we're definitely been blessed here through that process.
Super cool. I know one of the things you're passionate about is really getting other partners involved in projects, right? To, like you're saying, raising capital for those projects and helping, getting them as partners, but also giving back in a way. I know anyone who has a conversation with you can see that have a heart for giving back, for helping people to think about their financial independence, their financial freedom, and doing what's great for people of the land as well. So talk to me a little bit. We'll get into that shortly, but tell me a little bit about the types of construction and some of the projects, and then we'll talk about how that serves the community as well, and continue kind of unfolding your story here.
Sure. We kind of have a couple of channels that we work through. The first one is just creating, we have clients that have rental homes that need to be what we would call livable spaces, or turned into livable spaces for renters. And so we go in and we'll replace cabinets, countertops, flooring, bathrooms, turn the spaces in something that is, pretty nice on my end. I think they are, paint the whole fixtures, modernize, whatever you want to call it, and really make it into a good, comfortable space for people to live in. The other side of it is a client that actually wants their home redone. So, by going in and doing a bathroom or a kitchen or new flooring or paint, we add value to the homes to increase their equity inside their house, by creating value. And that's really the two tracks that we run down currently at this time.
Got it. So for people that want their own home remodeled, but then on other homes remodeled too, is that like investment property?
Yeah, that would be like somebody that has like an investment property that they're using as a rental or a condo. We do a lot of condos here, especially on the coast. These small platform, 800 square foot, 900 square foot condos that they want to see return value. They're using it as passive income. It's like a second or third income property. And so they want to increase the look of it, the presence of it. So renters coming on vacation are more apt. They look at it and say, oh, wow, this is modern. This is nice. Let's rent this one. And so what it does for them as we renovate these condos just creates a steadier stream of income for them going down the road. It's more likely to be rented. If condo A looks really nice and has modern fixtures and a modern bathroom look, modern countertops, versus someone that still has, their 80s style things going on, which there's nothing bad with that. Hopefully they'll rent the A over the B kind of thing. So, yeah. And they can raise the rental price as well. So they're just creating more income by investing in the vendors that we work with, our company, other vendors that we partner with, to just kind of achieve that extra value inside their property. So
Yeah, 100%. I mean, you can't really deny curb appeal or look appeal, right? For the
Exactly.
place.
Mhm.
And so, people want uh, many people coming to visit too, either short term or even, those that might be someplace longer term want the more modern stuff that want, may not be so into the groovy, shaggy carpet.
Right, right. Exactly. We're too finding a lot of like midterm rentals, people come into work for 6 months. And so owners want those properties turnkey. They don't want any problems. They want it nice, no problems. So they don't have to worry about a renter being there 6 to 8 months or something like that. So you see a lot of that too.
Got you. And, forgive me, I didn't bring this up earlier, but you've worn a lot of hats as well. You talked about real estate starting in side hustle, but, stuff like, pastor, high school coach, construction worker, and then, real estate investor. So how did you even find yourself in, this spot here, doing construction and private equity company, raising capital?
Yeah. That's a really good introspective question for me. How did I find myself here? Really, about 6 years ago, after reading Rich Dad Poor Dad, right? And um, from Robert Kiyosaki, that I really began to think about like my retirement and where am I headed with this industry that we're in, and how to really set up myself for retirement, for passive income, for different streams of revenue. I'm 58. I'm in good health and we're still going strong, but I don't want to lay tile floors forever. And so that's really what kind of started the journey. So my wife and I, Megan is a real estate agent here on the island. Been here, born and raised. Her dad's born and raised here, so she has a lot of roots. And we just began to look at how do we get in on this rental game to develop first a retirement platform for us, because we're both self-employed. Don't have any other kind of 401k to rely on unless we're doing it ourselves. And so that's how I got started. We started with one rental property actually in Coeur d'Alene, Idaho. And went really well. Then we started looking for properties here on the Big Island. So now, then we got our first rental here, got our second rental here. So now we're just in a process of developing those and doing some development, building some houses as well for those kind of purposes. That's how I got started. It's like, how am I going to retire, dude? So
yeah. That's it's kind of crazy, right? The Robert Kiyosaki, Rich Dad Poor Dad. Many people have heard about this book, but I think it's pretty
exactly.
It's like, Kiyosaki and his family is, quote unquote, like from right down the street, right?
Oh, brah, the Hilo boys.
Yeah. I can remember, reading that for the first time too, and seeing like, holy shit, excuse me, like, dude, he's from here, So,
I know the high school. I know where he went. I know that street. I know all these things. Yeah. I know exactly what he was talking about.
And I think, how cool it is for you, but also for it to kind of come full circle to serving self, but also serving community as well. I know that's a big one. So, kind of that in mind, we talk about like raising capital, right? And a lot of people may not be even familiar with like what that even means, like private equity firm. Like, I don't know when you learned about private equity, but like everyone knows, like, oh, construction, we know like rentals, right? But what is this, if you're talking to some of these people that you want to serve, that you care about, the blue collar worker, like, paint a picture. What does this mean, Kurt? Like, okay, cool, I understand like construction, I understand like remodeling, but like, what does this model look like? How does this apply to me? How would someone want to do?
So that's good question. One of the problems that we found, even in my life, is that some of the terms and understanding of what investment is, or let's even back up from there. What is money and how do we use it? And where does it go? Just some of those basic questions, we're not, and as a general rule, we're not taught that in public school. We're not really taught that in life. If we get that, we have to come to it. And so I came to it just like everybody else. And so it's been a learning process. And so kind of what we wanted to do was back the process up when we talk about investment, and really start from helping them understand, okay, what are you building for your future? What are you building for your retirement, for your future generations? What kind of structure? We say we are here to help you build your financial fortress, and put it in languages that they can understand, construction terms. We build brick by brick, step by step. We go off a blueprint. We create a blueprint for you so you can read it and understand it. We put the steps, the bricks into place. So we're building a foundation first, and then we're building the walls, and then we build that's really how we put it in language for what I would call the blue collar entrepreneur, the blue collar worker, the people that we're very familiar with and want to see change in their life, because most of them are really good at making money, and most of us are really bad at putting that money to work for ourselves. And so what we want to teach them how to do is take that money that they've worked really hard for and put it in a structure where the money works just as hard for them now as they worked in order to receive it. And so helping them understand those kinds of processes first, then we can get into all the nomenclature, the language, the investment language, and those kinds of things. But we want to help them see that we can help them create a generational wealth, a financial freedom first, and then generational wealth for the people that are coming behind them. Because for most of us, that's why we work. It's for our families. So we don't usually think about why we retire is for our families as well, for the generations that come after us. And so that's kind of where we start.
Yeah, I love that. And I think what's cool about your space too is that the terminology of building a foundation, the terminology having the frame there and adding things outside and inside, right, is so applicable. As well as, when I think about other things, local to island, it's like, well, plant the seeds for things to grow, right?
Yep.
So it's one thing.
Exactly. Yeah.
And for your generations and so forth. But, there's a lot of things like you're talking about, just kind of working backwards from, like, what does investing mean? How do I take what I earn today and how do I, store this and multiply, right? Kind of what you're talking about. So
exactly.
This didn't happen overnight for you, right?
No, and it didn't. But if we can help other people take the knowledge that I've learned just, in my short history in life, and help them jump the line. Yeah. That's what we want to do. First for my kids, I want to help them jump the line. I want to help them on their next step. But then, I see a lot of the young tradespeople in our industry, that are good people, work hard, and they're just and make good money. But how do we help them jump the line as well? How do we help them get ahead? And really secure a future, a financial future, to where money is not such a stressor on our lives,
100%. It's increasing financial IQ, financial education, right?
Exactly.
And so what I was thinking here too is that, like I was saying, it didn't happen overnight for you. It doesn't happen overnight for anyone. And there was ideas like that you had to, be aware of, kind of had to soak in and, kind of had to think about. I'm wondering if there's certain things that you can think of, where you had to wrestle with and you had to overcome to change some of your mindset as well.
Sure.
If any of those things come to mind, you talk about like financial fortresses, was it a scarcity mindset? Was it abundance mindset? Was it thinking long term?
Right.
Some of those things.
Yeah, I think you hit on it. For me personally, one of the first ones, we all have limiting beliefs where we come from in our environment. We have to work through those. And some of those I think are endemic inside the blue collar industry. As we grow up and work in that environment, for me, it was a scarcity mindset first and foremost, as I thought about it, that seeing money as a limited resource, that I have to work really hard for it because tomorrow I may not have another job, it may run out, kind of thing, or I may have to wait 6 months until my next job. And so the scarcity mindset, I think, was a limiting factor. In other words, that I got to hold on to this tightly, or I may not have enough of it, or I have to work through that. For me, that was one of the first hurdles I had to get through. Is like, well, okay, I have like $20,000 in savings, but it's just sitting there in savings. It's not really doing anything. Okay, let's put it to work. And that's kind of a scary thing when you think about it. I'm taking what I think is safe, in the bank. But if we can put it in an even safer way for the money to work through, such as real estate, that same investment now is making, 12 to 15% in cash flow coming back to me on a monthly basis, if we do it right, kind of deal with rentals and those things. And so to help me, I had to work through that money comes and flows, and we need to put it to work is really what we need to do, not just let it set. I think, as I was thinking through some of that question that you mentioned, I think another one is that I'm not good enough to do this. I think tradespeople or blue collar workers, especially like myself, we kind of get siloed into like, okay, I'm a carpenter. And that's kind of all I do. And I really don't understand money, so I'm not going to try to understand money. Or let's turn it around. I'm a carpenter. I'm not a tile guy, so I can see how those guys are doing it, but I'm not going to venture over there and do that. I'm going to stay a carpenter, or I'm stay a tile guy, and or a floor guy, or what, painter, or whatever, roofer. But right, and we get siloed. And so I think part of that mentality says, well, money's over here, I'm going to leave that to the bankers, or I'm going to leave that to the HR department in my in my company to help me work through the 401k or whatever, and just leave it there and not worry about it, when there's so much more that we can be doing with that. But it takes a risk to try to get them, that we're kind of risk averse because we like our silo, because that's how we've been trained. And so to get over that risk averse sense, again, same from the scarcity, but we are good enough, we can learn, and we should be learning about how to put our money to work in a diverse number of ways, not just rentals or property investment, but there's a lot of diversity that we need to create with our money, to help us in the long run.
Yeah, absolutely. You touched on so many good points there, like scarcity to abundance, and as well as, thinking of kind of staying in your lane, a carpenter or whatever. And well, I may not have the background. I didn't go to the fancy school. I didn't do this, or I didn't do that. And all of those reasons, right?
Yes,
and the security of like, well, I have this in the bank and I feel good now. I've got this, right? But it's kind of like who you need to be in order to do that thing as well. I mean, like you're saying, you and others hardworking people, like, I'm sure you can see what the project, the end state looks like. And so if you can just do the work along the way, you can be that person that's like, oh, well, I've done this now, I know how to. So what would you add on to, like, to think of helping someone else, or even just how you overcame of how did you go from, moving the needle, like getting out of scarcity mindset to more abundance mindset? What would you say?
Oh, well, for myself, I had to look at money in a different framework, that it's just, that it flows, that it comes and goes, and there's a flow to it. And it's not something that really expresses my wealth. I think my wealth is expressed in different ways, but to really see money coming to me, and in a constant, consistent basis, that it's not scarce, to help everyone see, well, the paycheck comes, the paycheck continues to come, you're doing the work, the money's coming, kind of thing. And then to kind of framework myself to say, that money is always there for me, and I can always find money, and it'll always come to me. It's what I do with it and how I spend it, or how I hold on to it, or how, what do I really want to do with it, that it's just a means really for me to get to where I want to go. And I think that was the key thing. It's not the thing that, yes, I do pay bills, I buy groceries, and cars and all that kind of stuff. But is there a way to use it as a vehicle now in a different framework? We usually only think of it in like the tangible goods that we need, so that's like money. But can we understand it as a way to create a platform that ensures, my passive income, that it's going to come all the time? And there are ways to take that money to make it work for us in that manner. And so that's one of the shifts that I had to make, is just seeing it as something other than a necessity, I guess. I know it's a necessity, but seeing it as like it's available, it's abundant, it's out there for us, and we just have to grab a hold of it and utilize it, and not vice versa. It doesn't utilize us. I'm giving, just kind of a basic framework that had to take place in my head. And of course, that didn't happen overnight. That took for me, probably several years once I finally got serious about, reframing my thoughts on money and what it meant to me.
Yeah. And it's a commitment to change mind as well, and just kind of continuing down the road, down the steps, and, building the ideas brick by brick.
For sure. Yeah. And it's literally, for me, to tell you the truth, and I see people that are further down the road than I am, but for me to look back over the last maybe 6, 7 years, 8 years, and see the bricks that I've put into place to see where we are now, I think we're doing a really good job. We're doing a really good job.
So that, I think, is so key there. I want to constantly improve. I'm always looking at what's next. And if you're always looking at next in the horizon, well, the horizon never comes.
Right. Right. Yeah. I'm a big subscriber to like James Clear's, 1% better today at something, right? So, and, it has a cumulative effect. And, we try to bring that to bear not only in our job site and our work sites, but also into this philosophy of like capital raising and money and investment, that it's small, incremental, but over time you see the growth. It's like you're back to your planting analogy, orchards, and avocado trees and citrus trees are here really big here on the Big Island, but that doesn't happen overnight. They don't produce the first year, the second year, third year even. It's the 4th, 5th year that they start producing, and it's only 10, 15 years down the road where you have this nice avocado tree that has, tons of fruit. And the same needs to be applied to how we see this incremental process and helping us work through just the small steps that we need to take.
1% better all the time. Yeah. The compounding effect as well.
Yeah, I think it's like if you do 1% on one subject every day for the year, you get 37% better at the end of the year. The end of the year return is like 37% total or something like that, some crazy number.
Yeah, I do know it absolutely stacks. I remember seeing something like that. I don't remember the numbers. I'll take your word for it. But certainly. So let's talk about what this looks like for someone to invest with you.
Okay.
Like, give me, paint a picture for, the listener on, the blue collar worker here, the construction worker, whoever that's like,
sure.
I got some cash. I heard this. I listened in. Sounds interesting. I don't know all the things, but I trust you. And, tell me more. How does this work? So what is it like?
For us, we try to keep it as simple as possible. Yeah. So there are two different types of quote investors according to the SEC. They're accredited investors and they're non-accredited investors, and it has to do with on either how much you make during the year or what your accumulated wealth is. And so for the most people in my group, they would be considered non-accredited. We do have accredited investors that we work with, and those are very vital to our platform as well. But for somebody that say is an electrician that's done really well this year, they have an extra, $30,000, $50,000. And they come and say, well, just show me what this looks like. We say, well, we'll sit down and first help them understand what investment really is. And then we look at like projects that we can flip first or that we can develop. We want to create enough margin to where when they invest their money, we usually have 18 to 24 month use of that money. In other words, we're going to put that money to work either in the flip or the development of a project. Pretty simple. We've developed a project, we rehab it, we turn around and sell it. And there's a profit on the sale. We take a piece of that profit according to however much they've invested, investor share in that project. They get a percentage, they get their money back because we've sold it, and they get a return on that money. Now, hopefully they'll roll that over into our next project, but then they can see that in 2 years, their money's accumulated, 10 to 15% on their investment, and they can do it again and just keep building that wealth. Hopefully, as they grow, as that investment becomes a larger sum, they can begin to do this on their own. And that's really what we want to teach them how to do. We don't want to just necessarily keep everybody in our pocket. I would love that. I would love everybody just continue to work with our company.
Sure.
But if I can teach an individual how to do that on their own and accomplish that on their own, and then to duplicate that's what we consider a success, and we want to see people develop those kinds of portfolios, those passive income portfolios. And if we can help people do that, then great. That's what we're all about. But that's what it'll look like. Invest your money. We'll show you what all that looks like. We give you the blueprints of what's going to take place. We have timelines. We have exit strategies. If this doesn't sell in whatever time frame we put in there, say 4 months, then it becomes a rental. Now you get into the area where, okay, you have money coming in every month. You get a certain percentage of that, and then now it becomes a cash flow situation. Then we teach them about cash flow. Hopefully, eventually, we'll sell that property. But we have several exit strategies for the single-family residences that we're working with.
Awesome. So you'd have a certain project, and all projects are different, right?
Correct.
Different. The numbers are different. You have to look at lines, look at money in, the amount of time that a rehab or whatever the work is for the flip. And if not the flip on one type of exit strategy, then you would hold. And then based on however much someone invested with you, they would get a percentage share of cash flow, tax, benefits, other things like that too.
Correct.
You'd go over all of that with your investors. So that makes sense. But like you said, I think the kind of investment box expected returns you like to analyze for your investors is around 50%. Was that accurate?
15% is the mark, is kind of our baseline. That's where we want to see our margins fall on whatever we're investing in, whether we're doing a flip or development. We want that to be our baseline. And so we base our rehab, our remodels based on that number, whatever it is, converts to, like, say if the property is 500,000, or if the property is $1 million, our baseline still on return needs to be about 15% on the money that we've invested. Usually we can hit better than that. We've seen numbers better than that here on the Big Island. We can see those numbers larger for the single family homes and residences, just because it's a very limited resource here on the the housing is a very limited resource here on the Big Island. And so not a lot of properties stay on the market for very long here. And especially remodeled ones, we see very few staying more than 6 months. They just get snapped up and bought because it's such a limited resource. So that's one of the reasons why our market is so good.
And that's a great problem. A great problem. for you as builders and investors, because
Yeah,
it's such
exactly.
a hot thing that, well, it's going to move, right? It's
Yeah,
gonna
yeah.
help.
It's going to move. That's what we want. So yeah, and there's bad sides to that too. The con side to that is that the investment's a lot larger usually. It's like where we buy like here's an example. We saw a deal yesterday for a 1 bedroom, 1 bath house with a double garage, kind of warehousey looking thing, on a lot, a 12,000 square foot lot. It was $500,000, and that's like, that's a crazy number to most people when they look at it. But for here, that's like, okay, that's baseline. That's kind of where we're looking to start, kind of deal. So we look at that property and say, well, how do we value add to that? How do we put 2 bedrooms or 3 bedrooms in that? Can those garages be converted, one of them into, like a bedroom, and add value to the house automatically? So then our resale value goes up on it tremendously. And so that's, one of the ways that we look, value added is always the best way to go here. But that's, that's kind of where we focus. 15% at least. I would like 18 to 20, and sometimes we can hit there if we get the right deal.
Got it. So at least 15 is what you do your analysis on, but you can done more. But just a way to you have a number in mind to do the analysis, set expectations, and if you do more, you do more.
Correct.
So one of the things you talked about, that example of like 500,000 for that that baseline valuation or pricing for a house, and investors coming into work with you by investing cash and getting return on their money. But I think it's always important to note, and it was just a great aha moment for me, and I'm kind of trying to drop some of that in here too, is that you can have multiple investors that can come in and work with you, right?
Oh yeah, definitely.
And I think that's so cool because I left Hawaii to go to Seattle in 2011, and I raised in the Big Island. One of the things that's always important and I love is the teamwork aspect, and things like many hands make light work. It's like
right.
it's applicable here too, because if you have other investors, you have 2, 3, 4 other people that come and work with you as well to invest, and you guys all know what the project kind of end state looks like, right? Rehab, remodeled, whatever, and it's all sold. You can all, many hands, many investors, many of you people coming together, makes lighter work for the work, right?
Yeah, exactly. And it helps too, because that's like the big hurdle now is like, okay, for an individual, it's like a down payment on a house, 20%, or let's back up. Let's just say 3% if you're a first time home buyer. It's like you're looking at $15,000. Okay, that's just the down. That's just the down. That doesn't count all the other costs that go involved to purchase a house.
Yeah.
So that's a big heavy lift to a lot of people. And if you're not a first home buyer, it can go anywhere up to 20% then. And so $100,000 to have in your pocket to purchase this flip is really difficult. But if there's 5 people, and like you said, it's an easier lift. And so we want to see some of that. That is mostly what we see taking place with us. We have we've developed a good base of people that say, let's invite other people into this process, share our knowledge, share our value, share our ability to create some of these things so that other people can learn and help each other along the way.
Yeah.
I think it's an important value here on the island.
Yeah. Collaborators, partners, right?
Yeah.
So I had 2 of the things that came to mind while you were, explaining. One of the ones that's come to mind is, you're saying it'd be, great for people to continue to invest with you, see the future of after one project, roll profits into another. But ultimately, it'd be great for you to share your knowledge so other people could have investors work with them on their projects, and for them to, do things as well and give back. You said that's what you were looking for, but I'm curious if you can share, why is that important to you that happens?
Well, I think one, it secures a person's, if somebody has I mean, look, if somebody has the ability and the knowledge to do what we're doing now, first off, then they can handle it on their own. It's always better for them, they can choose, they can be a part of it, they can like create their own focus. But I think the second important thing is if we give them the knowledge to understand investment, they can seek out, and we teach them about diversification, then they can seek out other things on their own. They can evaluate whether they're good or bad for themselves. They can build their portfolio on their own, and then they can teach it to their kids or to the people that are coming after them as well, which is the other important aspect, that we take the knowledge and the ability that we have and we're passing that down to the next generation. Not just our money or our wealth or those kinds of things. The wealth really lies on the knowledge and the ability to create these things.
100%.
So,
Dude, I wish growing up on the island that I had this knowledge available to me then, because this is like a game changer. It really is a game changer. And by the way, it wasn't really possible until Jobs Act 2011 anyway, so it wouldn't have been possible the same way, just for anyone who's listening. But I think it's really good for the island and the people too, because like you said, it's not just the wealth of, from a financial sense, but the wealth of knowledge for others to do it.
mm-hmm.
And I think maybe you can comment on this too. It's like, well, you can have your 20 grand or so, or 30 in the bank, but if you put it in real estate and have your money work for you, then it's going to multiply, right?
Mm-hmm.
But I love your thoughts on this. You tell me, is money kind of safe and good in the bank? Does it? Inflation's a thing. Talk to me about, is it a great thing to keep money in the bank forever?
Well, no. Okay, so don't count me a conspiracy theorist or anything. It's just my belief on money, and I think you should have some money in the bank,
sure,
for emergencies, for liquidity, right? Yeah. It's passable, but I think that there are other ways to just that we can invest and have money. Just say precious metals for one example. We're talking about diversification.
Yeah.
That's money. That's in a way to keep and store where its value increases or is kept safe.
Yep.
But I think for real estate and the trends that we see, the reason it's safe is that, well, one, you're purchasing really land, and land they're not making any more of it, and so it becomes increasingly valuable. Location, right? So land is super important. It's a valuable store of your money. It becomes what we call an asset, right? And so you now have this asset that has a store of value in it that historically over time is only increased. And there are very few instances where we see the value of land decreasing, especially here in Hawaii. And because it's such a limited resource, it becomes a very valuable asset. And so if we can teach people that it's a perfect way to store your money, there are advantages that come that the government wants us to be homeowners. The government wants us to be investors in real estate on top of being homeowners. They give us incentives in order to do that. Incentives in the form of like how we receive money back, how we can take money off of our taxes. And if you look at like the wealthiest people in the world, 9 times out of 10, they're very good at investing in real estate. And the reason why is their incentives, especially our government gives for people that are creating housing, that are developing housing for people and for themselves. And so if we can teach, those valuable aspects of how money becomes, in my opinion, a safer place to put your money is in real estate. If we can teach people how to do that, then great. Still need to diversify. Don't put all your chickens in the real estate area, right? I'm not eggs, they're chickens. Don't put your chickens there. Don't put them all in gold or silver or oil wells or those kinds of things. Right. Don't put them all in the stock market. Stock market's great, but it's super volatile up and down. what was it, a week ago, everybody in the stock market made tons of money, but it's already going back down. So all that gain that we saw, is slowly going back down. That's okay, but it's volatile and you have to be okay with that. Real estate tends not to be that way. So it's a little easier on my stress level. So it's like, I just lost like $5,000 in the stock market, right? No, my land is safe. It's valuable. I know the value's still in it. And so that's why we go the real estate route. I think it sets people up for a long-term financial fortress in a better way. Still teach diversification, but I think the main foundation for anybody's portfolio should be real estate.
100%. I think I need to drop Mike there. I think the the one thing I want to add is that we're not making this stuff up. I'm really thinking about the people that I know and I think of in Hawaii. It's like, this is what the richest people in the world are doing, this exact models. And so, Kurt and I aren't having this conversation like, yes, this is amazing, but like we're not making it up. We're just modeling after those who've succeeded. So
yeah, and I think that's really good, Stephen. I think that we're following a model that has proven success.
Yeah.
And both of us, we are in that model and we're seeing success ourselves. And again, I want to bring other people into that model to help them have that same kind of success. And that's what my heart is, because I see, construction workers or tradespeople or blue collar entrepreneurs getting to retirement age, and 401k and Social Security guys are not going to help me continue to have the current lifestyle I'm having while I'm working. When I get there, it's going to be less significant. And so unless I'm doing something about it now, I'm not going to have that same kind of lifestyle or freedom, that I'm desiring. And so that's where my heart really is to help other people come along with us in these models, coach them, help them replicate it, let them go teach the next generation, right?
Mm-hmm. Mm-hmm. Better together.
Yep.
Sure.
Always.
Thanks for sharing that on your heart. Two values that come in mind, is looking at your stuff, of course, as I do. And I know it's kind of, on the way to closing up here, but I think this is important to mention. Two values, grit and innovation. These are kind of close to home for you as well. Can you kind of talk about these here quickly?
Sure.
And, define them and what they mean to you.
Which ones do you want? I'm sorry. I have three. So on our blueprint on our website, but that we produce, and three that are close to our home. But true north for us just really means, it's kind of that principle that what guides us, what are we never going to get away from, and what do we always have to keep at the forefront in order to arrive at our destination. Again, it's kind of a term that we can relate to as tradespepeople or blue collar entrepreneurs, right? Really just means ethical stewardship. Everybody always says integrity, transparency, those kinds of things. But I think putting it in a manner that we're stewards of not only what we're doing in other people's investment, but we want to see that investment not just caregivers or shepherds or that, but we're care builders in the process with other people's lives. And so that becomes like, a very important part. We have the grit and innovation. I think grit for us just means, not only do we work hard, but we're going to work to see something concluded or something finished. We're going to get to the point. We're going to, we're going to find the solution that helps us, and on all levels, especially our investors, find their financial freedom, find the thing that they're wanting to build. And when you have that kind of determination, that kind of grit leads to innovation. We have to look a lot of times outside the box, right? So I think they go together, and that's why we put them together, that innovation, grit leads innovation, and then innovation causes more grit to happen, right? So they're kind of in this little symbiotic circle. And then our last value that we have is called power in the blueprint. And I think, we've talked about that a little bit already, but really it's a value that we keep, that it's like, we're going to be creating from a foundation. We're going to build brick by brick. We're going to put things into place to where you can be successful, not only today, but in the future, and your kids can be successful in the future as well. And so the focus really in that is that it's for the long term. We're going to make money today, but really in the long term, we're going to make money tomorrow, right? So I think those are what drive us at Blue Capital Investment.
I love it. Super cool. Yeah, I didn't know about the other two. I was seeing Grit and Innovation, those, out to me, but Grit, Innovation, Blueprint, and True North. I see how they all work together. So awesome, man. Kurt, I appreciate being here, brother.
Thanks, brother. Good to see you again.
Yeah, likewise. Where can people connect with you?
My website's bluecapitalinvestment.com. You can look us up there and see what we're all about, and get my email there. I'm on Instagram at Bricks and Benjamins. We take a little bit different tack with our Instagram, and our podcasts are all Bricks and Benjamins. And so just look us up there. It's at Bricks and Benjamins on Instagram. I am on LinkedIn. Just look up, I have to put my first name on there, Eric. For some reason, they won't let me put my middle name. So it's Eric Kurt Simon on LinkedIn. Just find us there, and you can join us in all those places.
Outstanding. And I'll make sure those are in the show notes as well. Go connect with Kurt.
Thanks,
Awesome.
brother.
Cool.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.